faith meets finance, and we're on a mission to halalify investment world, one stock at a time, inshallah. And today's topic is peace or war, US-Iran talks and market rollercoaster. So over past few days of my wonderful audience, markets haven't just been moving; they've been reacting to this confusion. Right, one day headlines suggest progress on U.S.-Iran peace talk, and next day those claims are denied. At the same time, concerns around the Strait of Hormuz are back in focus, and oil prices are swinging with every new development. So the big question for investors is simple. Is this leading towards stability, or are we heading into deeper volatility? Today's cutting through noise, no politics, no sides, just a clear, like a focused conversation, what all of this means for oil, global market, and how investors should respond, especially those building the portfolios aligned with the Sharia principles, right? So I'm joined here with our wonderful guest, Brother Shah, who has very interesting and informed thoughts on the many topics related to the market, related to how the stocks move, and etc. And then he will be sharing and helping me untangle all these questions, inshallah. Brother Shah, do you want to say a few words?
Yeah, assalamu alaikum, brother Nath, and to all of our viewers. Thank you for having me. And yeah, it's a really happening time in markets right now. There's a lot going on, so excited to dive into it with you.
Inshallah. And I will make my most important piece, which is disclaimers. So Musaffa LLC is our as US SEC registered investment advisor. This registration does not imply endorsement. The session is for informational purposes only. It should not be considered as investment advice or recommendation to buy or sell any securities. The discussion is not tailored to your individual financial situation. Please do your own research or consult with a qualified advisor before making any decisions. The views and opinions expressed during this session are our own and may not be representative of the viewers or experiences of others. All investments involves risks, and past performance does not guarantee future results. These are very important because we're a regulated entity, and we have to make those statements so people are not confused when we discuss these various topics, which are very important for our investors to have as an additional educational informative source, right? But it's not the final decision making for you. And again, as usual, we always like when our audience is engaged. We love how you participate. Please always leave your comments, add your questions. We always bring them up. We always love communicating and engaging with our community, with our audience. But first question I want to ask, if you can leave it in comments, where are you joining today? And I will ask our moderator to put that question so that if anyone else joins, they see it and they leave this in the comments, and we will bring it up to our audience to share. As usual, at the end, we have this discount code, which we want people to take a benefit of. And I guess without further ado, we will jump into the discussion, right, Brother Shah?
Excited to do it.
Great. Just at the outset, a few first questions to begin the topic. So we're seeing this headlines shift almost daily, right? Signals of peace one day and denial as the next day from both parties or other parties. How does this kind of like a back and forth of sort of roller coaster approach uncertainty actually translates into the market behavior?
That's a great question. And like you said, a roller coaster is a good way of looking at it. Up sometimes, down sometimes. And it's almost like a one-to-one correlation, except it can be a bit honestly even magnified. So you see one day you think things might turn out one way the talks might turn out another way. So there's a lot of uncertainty, like you said, and that uncertainty in events translates into uncertainty in the markets. And when markets are uncertain, they become a lot of more speculative investors, especially, result in markets becoming hyper reactive. So there's a lot of volatility. So when the news looks like it's pointing in one direction, you'll see an overcorrection in that direction. When it looks like things are moving the other way, you'll see a whip back in the other direction as well. So that uncertainty again translates into massive volatility. And you see that in the numbers in the market as well. I saw one analyst said, he put it in a very good way. He said markets this last week for oil started and ended the week at 112 per barrel, but there was a lot of movement in the middle. So you see that that confusion, that uncertainty play out in the numbers as well.
Great. Thank you for explaining that. And then, is the market reacting more to what's happening or to not knowing what's happening?
That's a great question, and the answer is kind of both. So in a way, markets are sort of hyper reacting or overreacting to everything that they think is happening or they think might happen. So they see any news that makes them think, okay, now this is what's going to happen. So they overreact to it. But the reason that's happening is because they don't know what's happening, because there's no one's in the, only a few people are in the room where these things are happening. It's not clear what's going to happen. So that lack of information makes people jump at any little small nugget, even of a rumor that they hear. So that's basically what's happening.
Great. 1 second. I'm checking the audience, and please, for the audience, please be active. We're anything that you post or any comments that you leave are very important for us, and that helps for other users to see as well, and learn at the same time, right? So your support to us is very important as well. And then if you're joining from any parts of the world, please leave that in the comments, and then we would be happy to see that. Thank you so much. So now we move on to more oil related questions. So oil is it like a trigger point right now, right? So the Strait of Hormuz is suddenly back in the focus. Like, this is main topic these days. And then reminding, like what we discussed last week, what makes this one location so powerful in shaping the global markets, and also if any changes happened from the last time that we discussed, I guess 2 weeks ago, right?
For sure, yeah. So yeah, it's been an ongoing thing of note for anyone paying attention to markets, and you think it's going away, but it's so far it's been here to stay. And the reason for that, like we discussed last week, and I'd encourage everyone who's interested, go back, check out that video on YouTube, listen to that talk. We go a bit more in depth on that specifically. But the reason for that is because of how much passes through the strait. So between 20 to 25%, depending on the year, of seaborne oil goes through the strait. So when you have this kind of tension there, it has a massive impact on markets. Natural gas, I think a third or more of the world's natural gas passes through there as well. You have sulfur, and the inputs that go into making fertilizer also passing through there. So these are sort of fundamental linchpins of the global economy that are going to have downstream effects in markets, and they're all being affected by the current events. And so that's why it's so important, something for investors to keep an eye on. Really, is just because of the centrality of these things and how closely tied they are to, not just single sectors of the economy, but the whole economy, and the whole economy globally for everybody.
Absolutely. Yeah. So, and at what point do the oil price movements stop being like a noise and start becoming a real macroeconomic problem? In the sense here, because right now everyone is about hyper focused on the market about the short term, but some people are already planning for the long term, because it's going to have some ripple effect towards the end of until the end of the year, another 6 months, 8 months, or maybe like 12 months, right? What do you think about that
For sure,
component?
it's a very important question actually. So there's two things that investors should be balancing, or anyone looking at the markets or at events should be balancing. One is that commodities generally, and oil and gas specifically, are considered usually to be mean reverting. What that means is they have a certain valuation, and then based on noise, as we say, it goes up, it goes down, but it comes back pretty much at the mean, at the average.
Hmm.
But that's not necessarily the case, right? And what investors have to pay attention to again is commodities are physical things. You know, oil is a molecule so it's
Hmm.
not just numbers on a screen that go up and down and will always go back where you expect. And in order to see how do we separate the wheat from the chaff, how do we see what's noise and what's maybe a structural or at least a medium term or longer term change, is you again think about it as a molecule, right? So there's actual infrastructure, there's refineries that pump this oil, there's channels that transport this oil, and if those are damaged, it'll take time to fix those, right? It takes time to get things back up and running. And so
Hmm.
in the meantime, if there's less supply, that's gonna have an effect on the markets. So that's something that looks more like a structural change rather than noise. The question then becomes, okay, how much of this is noise and how much of this is a structural change?
Hmm.
And for that, it's important to just keep your eye on the news, see what's going on, and a little bit of like you have to wait and see, right? Because the markets right now are, like we said, hyper reactive. There's a lot of noise, so it's
Hmm.
hard to parse through exactly where things will settle.
Yeah, inshallah. Yeah, I believe we have to stay vigilant and
100%,
very informative about the market, but also start studying a little bit macroeconomics, like the future long term. Um, uh,
100%.
yes. So, and then what are those early warning signs that you think people should watch when they want to see and catch how the macroeconomic trends or like a future trends or even of the market is going to tailor towards those changes, right? These effects of this things that is happening with in the oil market. What are those early warning signs?
Great question. So every economy is a bit different. So for investors everywhere in the world, there might be some specific things you should look at when you're thinking about, you know, the economy in your country at right now. But some major things that are relevant to everybody. Number one is inflation, right? How are prices doing? Were prices already rising? Are prices elevated? Is my grocery bill higher? Are my utilities higher already? So
Mhm.
if you already have inflation or rising costs, and then on top of that, there's an oil shock, right? And that could have pressure inflation higher because oil is used in basically every industry. We use it in our cars when we go to work. The bus uses it if you don't use it. Your
Mhm.
plane uses it if you're traveling. A jet fuel, rather.
Yeah.
So it has massive trickle down effects. So if there's a country that's already suffering from inflation or was combating inflation, and then suddenly there's this additional inflation pressure, that can add a sort of a fragility to your market or market economy. So
Mhm.
that's something to keep an eye on. Another thing is unemployment. So because the way federal banks work is, at least in the United States, which is a great example generally, but again, you should look into how your country exactly works. But it has a dual mandate of, okay, how do I fight inflation? How do I keep inflation low? But how do I keep unemployment low? And
Mhm.
the way you deal with those things are actually different. So if you're
Mhm.
already in an economy that's having a problem with employment, and then you're already in an economy that's having a problem with inflation, and then this pressure happens, you suddenly face a choice like, okay, do I prioritize fighting unemployment or do I prioritize
Mhm.
fighting inflation? And sometimes you wind up doing a bad job at both, right? So
Mhm.
you have to pay
Mhm.
attention to those two things, and also how is the central bank of my country, what is the policy response, right? What are we trying to do, and how successful do I think this policy response is going to be?
Mhm.
And those are the main things I think, especially if you're someone who doesn't know a lot about macroeconomics or that sort of thing. Those are the three big things. It's like, what's inflation like right now? What's the employment rate right now? And what are they doing about this? What are policymakers doing, and how
Mhm.
effective is that likely to be?
Yeah, I believe this is a very key point, and thank you for sharing for our audience to learn in these situations because these are the signs that they will start seeing it, right? So if they're tracking these three factors. And if there's start changes, that means these are like early signs of future structural changes, right? Not what the
100%.
market reacting quickly to the news, but the structural things are changing and happening. Let's say the whole March has been very heavy with the situation in April, either unemployment or inflation jumps up. You see that already like structural changes happening, right? So,
Exactly.
brother Shah, and you actually sort of um, predicted my next question about the central banks or the bank's reaction and the authorities' reaction to the inflation and these changes. So we covered that one. So three things that for people to watch, right? Unemployment in connection with the inflation and how the central banks or the authorities are reacting to that, right? Okay,
100%.
great. Thanks. So,
Of course.
um, so in the moments like this, do markets tend to overreact in the short term, creating opportunities for disciplined investors? Is this like a good thing for the disciplined investors? What do you think?
100%. I agree 100%. I think disciplined investors always have a bit of an advantage in that if you're hyper reactive to things, often you're wrong, right? Like you think, okay, prices will go down, so you overreact, and then prices wind up going up, so you're in a tough spot, and vice versa. The opportunity for the disciplined investor is that you have your thesis, you pay attention to the news, you think, okay, here's what I think is the likely range of events. And I've done my analysis, I've done my research, I've looked at what analysts are saying. And I think this rough range is where things are going to go. So you don't panic if things go higher or lower because you're thinking, okay, this is probably just the market being, hyper reactive, it's speculative, it's volatile. Things would still end up back in that range. So being disciplined sort of protects you from the follies of being too emotional, being too anxious, being hyper reactive.
Yeah, great. Um, thank you for explaining that. And we have people already reacting from different parts of the world. We have a user who is joining from Sweden. We actually love our Scandinavian users. They're super active. They're very strong Muslim communities in from Scandinavia. We have many investors who support Musaffa, contribute to its growth. And they use our platform extensively, which I will try to do at towards the end. I believe looking at the trending stocks is going to explain a little bit of the market, inshallah, which will be fun. But if anyone else is joining, please don't stay quiet. Please share where you joining from, and we sent the push notifications to the people. They should receive their notice that, hey, join our market talk with Musaffa, where we discussing very interesting topics. For example, we just learned a few minutes ago that you have to look at three things if you want to understand the structural changes after this oil price roller coaster, right? So um, I will move next in connection with the previous question that I asked, Brother Shah. So what do you think? Which ones are? Oh, we have someone joined from India who is just informed us. Thank you so much. Please stay active. We'll start bringing these up to show everyone our chat, our comments on the chat. So where are you seeing the more resilience right now? Which sectors are going to be the most resilient in these cases during this
Great
roller
question.
coaster?
Great question. So the number one, honestly, winners are going to be the oil and gas companies that aren't directly affected. So for them, prices are going higher globally. So when they sell, they're going to sell at, and they're going to make more revenue. And because if they're not operating in the region, they don't have vested interest in the region. They're sort of shielded from the kickback to an extent. So those are some companies that are going to be winners. There's going to be some losers as well, obviously. So, for example, the airline industry, jet fuel gets more expensive. People might fly less because tickets get more expensive, and it also they have higher costs because of the fuel that they're burning. So there's always winners and losers, and yeah.
Great. Thank you. I want to talk a little bit about behavior. We touched it a little bit about disciplined investors, but I want to go deep a little bit into that one. So, oh, we have someone joining from Canada. MashaAllah. Thank you so much. Our today's audience is super active. Alhamdulillah. Thank you for being with us and joining from every parts of the world. Look at this, brother, brother Shah. We have Europe, we have South Asia, we have
North
Western
America. Yeah.
Hemisphere, Canada, and North America. This is amazing. So um, when these and this kind of environment where the sitting like a still is smart than trying to play the market. What do you think? It's like
Uh,
I better sit and watch, or can I predict really well with the market and I can just play with it? I'm really good at it. What do you think? What is the best way to go?
I think everyone should consider speculation, especially for us as Muslim investors, right? We're not speculative investors, we're value investors by
Mm-hmm.
principle typically. So that's one
Mm-hmm.
thing to keep in mind. And the benefit we have doing that is that, like we said earlier, we don't run the risk of being overreactive because it's hard to predict things. There's no one today has the 100% success rate with predictions, right? There's
Mm-hmm.
if you look at Michael Burry, for example, uh, a great mind who predicted the crash in 2008-9, but even he hasn't predicted everything correctly, and he would admit to as much and has admitted to as much, which is not to knock him, right? It's just that it's impossible to have a 100% success rate. Um, so if you try to game the market, very often the market games you. So that's something to keep in mind, especially if if to some degree you think it's if you do want to analyze and think and increase your allocations in some sector or some asset class, the important thing is to do your research, right? It's one thing to be, I just think the price is going to all go up, so I'm going to put my money in this, and that's one type of investor who will suffer more often than not. And then the
Mm-hmm.
other type of investor is like, okay, I'm going to do my research. I'm going to look at the markets. I'm going to look at, like in the case of commodities, right, the physical molecules. What's like the physical reality on the ground? And I'm going to do all of this analysis. And based on my analysis, now I have a thesis. And based on that, I'm going to invest. That
Mm-hmm.
investor might not lose as often as someone who just sees a line going up and down and thinks, okay, I think I know what's going to happen. And let me just, YOLO some money into it.
Mm-hmm. Yeah, I was going to ask what does this smart risk management would look like in this case,
Mhm.
but I guess you covered about the being research is the main point. Do you think anything else they need to put it into,
Also,
like if they
one
want
other
to?
thing, which is a huge thing for investors, and we always mention as well, whether or not, is hedging, right? So
Mm-hmm.
hedging different asset classes, so whether and different sectors. So don't have all your money just in commodities. Don't have all your money just in tech, because if all your money was in oil and gas, suddenly your whole portfolio is very volatile, right? So don't have all your eggs in one basket. Diversify across sectors, diversify across asset classes to the degree possible, diversify across regions, right? So then if there's one part of the world that's having volatility in markets, you still have some money elsewhere that's more stable, that's going to keep your portfolio more stable as well. So those are the two things. One is do your research, and number two is be diversified, hedge your investments, and also, as we say always, don't panic.
Yes, absolutely. Don't panic because things might be short term, and then you go ahead and run and you sell it or you buy it something, and then turns out it is just reaction to the market, right?
100%.
Okay. Yeah. So we have really good question came up, which I will bring up to the. Oh, here we go. So it's coming from Brother Mohsin Hassan. What about the long-term passive investors? How should she react to this current situation? So passive investors who long-term, right? They put it into the ETFs in the long-term assets. What do you think, Brother Shah?
For sure, great question, and it sort of feeds into what we were talking about a minute earlier as well. So, long-term passive investors, who again most Muslim investors are, because we're value-driven investors.
Mm-hmm.
Number one, don't panic, like we said at the end of the last section, right? So don't just see the market and don't just see markets going up and down and think, okay, I have to make some major changes to my portfolio. Um, over the long run, right? So this might, even if it's a structural change, over the long run, certain trends are more likely to hold. So if you're thinking long run, don't be too distracted by short or even medium term things. However, at the same time, I encourage everyone to do their research, right? So, like we were discussing earlier, there's a degree to which things could be signal, a degree to which things could be a structural change. So, when you
Hmm.
see a major event happening, do your research, give it some time, and figure out, okay, do I think this is a deep structural change? Is this going to change how the market is going to look, not in 1 or 2 or 5 years, but in 10 years? And if it's something that, based on your research and based on how things are going on, you think 10 years later, this is still going to be a little different environment, then maybe you should modify your portfolio a bit. But that doesn't mean, I'm going to take 70% of my portfolio out and change it completely. It means maybe some things go from 15% to 20%, right? Maybe some things go from 12% to 10%. So you can make incremental changes based on what you think is happening. But if you're a long-term passive investor, if you're already diversified, um, number one thing I would say, and again, this is not financial advice, this is just our opinion, but don't panic.
Yeah, and I believe here goes to, again, as we put the disclaimer at the beginning. So it's not tailored to one specific person, but
Yes.
given the investor's approach and that their level of um, being informed and knowing all the things, investors might be at the different level of their investment journey, right? So, and then if investor invested in something that they didn't know and they only put in very volatile assets, they did not diversify very well, it may be a good reason to do extra research, right? And then reevaluate what you are investing in. But that is not related to the what is the market happening, right? What's happening on the market. It's just you probably not invested in a really good assets. Maybe you need to go and check like how much of the leverage in there under the market, how background the history of that stock, right? And maybe you just saw it on this on the signal. Oh, someone is recommending to invest in this, but actually you didn't look at the background or like fundamentals of the stocks, right? So doing extra research always helps. It doesn't matter even if the market is volatile or not volatile, but that is separate for the investors who are just starting in, right? And we don't want people to understand that this is tailored to everyone. That what we're discussing, which is current situation, what is happening on the market. So now I want to look at a little bit more Sharia conscious angle, right? Which is very important for everyone. Mainly our audience who's joining part of our community. So for the Muslims who Muslim investors, does avoiding highly leveraged companies become like sort of advantage in this type of environment?
100%. One thing which is in general an advantage is, like I said, most Muslims are, and principally we are, value-driven investors. They have a longer time horizon. So being less invested in, highly leveraged companies is good for us because it saves you from volatility. It protects you from the volatility that you so often see in financial markets, right? When there's speculation on an asset or a company, you see the number, the line on the screen go up and down very vigorously, be very volatile, even if not much is changing on the ground. So that's one thing that being value driven, that being less leveraged helps you with. And another thing is, in this specific environment, as inflation is pressure, there's inflation pressures around the world. Central banks might be looking to raise their interest rates as well. And as
Mm-hmm.
that happens, that's gonna have a greater effect on more leveraged companies. So you're also kind of shielded that way because you're not too invested. The companies you're invested in aren't that highly leveraged. You're not going to be as negatively impacted as companies that are highly leveraged.
Mm-hmm. Yeah, and this is very good point. We already raised it multiple times, but I want to show how you can find the less leverage companies on our platform, which allows you to a beautifully built stock screening piece, which helps you actually. And we have a really good question that came up from brother Saududdin Muhammad. So any good professionals in Muslim space to learn from and look up to. I promise I will try to look into with the brother Shah, and maybe we'll try to find those, and we'll try to invite them to these our sessions. market talk with Musaffa, inshallah, and then we'll pick with Brother Shah. We'll pick their brains. But we have already organized one interview with one of our professors who actually analyzes Muslim the Sharia-compliant stocks, ETFs, etc. And it's Brother Maurice. He posts a lot of research on the LinkedIn as well. You can take a look at our one of our videos, one of our market talks 2 weeks ago, I guess, or 3 weeks ago. So that was an interesting discussion. And then you can also check who we are inviting. We have lots of webinars that we did. We tried to invite someone knowledgeable. Alhamdulillah. So please check our YouTube videos. We had lots of interesting webinars. But separately, I'll try to look up into, and then we'll try to bring guests. But again, I want to share with you, Brother Saduddin, you educating yourself is always the best source, because just Brother Shah shared with us, even the person who predicted the crash in 2008, their predictions were, most of them, like in many components, were wrong, right? They just only predicted, and they were all saying that there's going to be crash. But I mean, that way everyone can say right now, like maybe 30% of the market participants are saying that they're going to be crash. But what if the crash is not going to happen? Then either those people are going to be really good predictors, or they're not going to be not good predictors, right? So it may happen, it may not happen. So again, someone talks towards one narrative, another person talks another narrative. But there's always this black swan things, right? Like the ones that you cannot predict, and they change completely the market. That's why I guess being informed yourself, it always helps you. And then using good tools, platforms is always helpful. And Musaffa makes it easy for you, which we will look into at the end, towards the end, which we're coming close. And I want to ask one important question, Brother Shah, and then we move. Actually, two questions, and if we quickly answer those, I'll show a little bit our platform. And again, whoever is joining from other parts of the world, please leave where you're joining from. So how should the Sharia-conscious investors think about energy exposure? Is this opportunity or caution more?
So, great question with unfortunately a nuanced answer. So one thing in general to think about is, like you said, so hedge. So don't have energy be your whole portfolio. Is again not financial advice. It's my opinion. It's good to hedge across different asset classes and sectors. Again, so that when there's too much volatility, you're not suffering as much. When prices go down in one sector, you're not suffering as much. The other thing is, the interesting question is, you asked, is it opportunity or an area for caution? And the dangerous thing is, and what I think makes, which is why markets are so hyper reactive, is because opportunity is often where you should be cautious as well. So it's when these kinds of times are happening, it's if someone does figure out a good analysis and he's right ahead of other people, that person does have greater gains to be made. So it's a more risky time, but if you do your research, if you understand markets well, there's opportunities for you there. But at the same time, if you're not someone who is well acquainted with markets, if you're not someone who's well informed of the situation, if you're not someone who's looking at all these analysis and integrating it in your head, then there's only risk really, because you're not making an informed decision. So it depends sort of on where you are and how much work you're willing to put in. There is risk, but if you're educated, if you keep yourself educated and informed, you can mitigate that risk. And that's true of the energy sector. It's true of any other sector as well. And one way anyone can mitigate their risk or reduce their risk is, like we said, regardless of how involved you are, how well informed you are, hedge your assets, right? Don't have all of your eggs in one basket.
Great. So, and I'm going to ask a very last question, but I'll give you like sort of multiple choice option. Brother Shah, the reason why, because you already covered these, and I want you to pick one out of those, right? So if the next few weeks they remain unpredictable, and then what is the one mindset shift investors need to navigate it successfully? So you mentioned about three things which I took it from this conversation is that you do research, you don't panic, and you diversify, right? There's three things that you mentioned, like mainly the important ones. So out of those three, which one you would pick the one that you consider the main important one?
So they're
And
all
during
very
this
important,
scenario,
but
during this
it's
scenario,
for sure. They're all very important, but what I would say is, I think one thing is Muslim investors, like we've discussed before, they're very or value style investors typically. So they're more likely to be diversified already, usually. So that's my guess. And so I would say the most important of the three, in my opinion, if one mindset shift, because I think it protects you from a lot of mistakes, is don't panic. Even in the Quran,
I,
it says, "La
I would
tahzan
go
inna
with that too.
Allaha ma'ana." Like don't fear, God's with us. So don't panic,
Absolutely.
keep your cool, and inshallah everything will be fine.
Yeah, and this is the great part of being Muslim, right? Because we know that Allah is going to protect us, right? Trust Him, and then ask Him to stay protected, right? So, and then risk comes from Allah, not much of like what is going to happen, because you have a risk if it's written that is going to happen, and if you panicking, you're making it worse, right? So, Alhamdulillah. And brother Saduddin said diversify. I totally agree with that. That is one of the three things that we're discussing, right? That they're very huge value, but during this time, I guess the not panicking is very, very important. And I want to share here a little bit of our platform, inshallah. So if that can be brought to the screen with our moderator team, it would be very helpful because I want to go through this leverage companies. Uh, Sister Nafisa Khan, can you bring the screen? Here we go. So I want to first discuss a little bit this component here. So I want to, by looking at the top gainers during these days, right? So 1 second, I guess. Um, so so if you look at the top gainers here, um,
Oh, I think perhaps Brother
yeah,
Anad
no,
can connect.
I'm back. I'm back. So
Okay.
here, basically, if you look at the top gainers, if you look carefully, the last two is the oil companies, right? Energy companies that are driving the market. They're on the top. You can see that ExxonMobil changed 3.27, and then Chevron is the 1.44, and the other ones are not that as high as this. We have also SanDisk here, but you can see that energy market is on top. It's driving, right? This shows what is going on. And you can see this from the trending halal stocks. You can always see how the market is reacting, where it's trending towards, right? And then if you look at the 52 week high, there are even more more energy companies. For example, ExxonMobil, Chevron again. If you skip these two, this three, then again, all these all the energy companies, you can see this. This is the reaction of the market, how it's going. So you can you can check all of this through Musaffa, alhamdulillah. And then 52 weeks high, that means like it's already for the whole year, it's the highest, right? So this is how market is trending. But if you want to also look at the leverage that we just discussed, so if you look at the Musaffa filtering, it makes it beautiful for your analysis. If you put halal, and then if you go to the financial screening, there is interest-bearing assets and interest-bearing debt. And if you put this one, this is against its market value of the company, right? So interest-bearing debt, if you take it to from zero and you put it to not, because the companies can have, if market value is 29, if it's till 30, then it's halal, right? So but let's keep it to below 10, which is in very, very good shape, right? And if you look at the US market, then you have halal stocks 812. So and then you can see that these are very strong interest bearing debt. You can see how, and you can put them tailored towards descending. You can see how many companies with a zero interest, right? So there are lots of good companies that you can look into, and most of them are A plus, right? So that shows for Muslims that there is a very strong players, companies that you can take benefit of, right? So, and that allows a Musaffa platform allows you to do all this research and help you to find the best stocks on the market. So, and I want to put here right now, I guess we're towards our end of our um, market talk, this episode, and I want to put that we always have this discount code that you can take benefit. um, so if you go to, but please use it through website, and then use it for annual plans. If you go and then want to purchase one of our plans and then benefit from our platform, you go to our pricing, and then pick one of the plans, and then when you want to purchase, you put, there will be the code, that discount code that you can put, and then if you put mark talk 10, that will help you to get your discount, 10% discount. And then we appreciate your participation. This was, and again, another one of the active shows, that the market talks, where we had lots of audience participation, which we love, right? Alhamdulillah. And thank you so much, brother Shah, for your participation and sharing your very knowledgeable thoughts, informative thoughts, that is important for our audience to hedge this market right now, which is under huge pressure and then under a roller coaster, right? And thank you so much for our moderator, Sister Nafisahan, for helping us with putting all of this together, and then making it available for our audience. Thank you so much for everyone. I guess we end from here.